Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Certainly US equities and global equities still pretty volatile out there, but it's really going to be pretty interesting next sort of few weeks as we get into the next round of earnings reporting coming out of the US. Now, first out of the blocks, we got some pretty big companies reporting: JP Morgan, PepsiCo, and also Delta. Now, quite interesting, we look at JP Morgan over the last sort of 12 months is down around 36%. Delta's down around 32%. PepsiCo is actually up slightly. It's up around sort of 3% for the year. So obviously with those sort of numbers now, it's going to be interesting to see, one, what the earnings is, because, obviously with a fall in sort of share price, that price earnings ratio has obviously fallen, but also as well, more importantly, on the guidance. And probably more so with sort of JP Morgan, obviously the major sort of financial conglomerate, but also as well Delta. Certainly airlines have been picking up over the last sort of 3 to 4 months, and it's just going to be interesting to see what their guidance is going forward. Now, all this comes on the back of still a pretty robust jobs number. Came in at 335,000. They were expecting slightly more than that, just over 300,000. But more importantly, the unemployment rate dropped to 3.5 from 3.7. And hourly earnings were still quite a high number at 5%. Although, again, it was down slightly from 5.2 from the previous month. But that certainly still gives the Fed plenty to think about, and most people still expect the Fed to announce another 75 basis point increase in the rate at their next meeting. Now also as well, just over a month before the midterms, it's going to be very interesting to see how that sort of plays out, because certainly the Democrats look like they're going to be hurt pretty badly in the elections. And then once those midterms are out of the way, you then start focusing on sort of 2024 and who are going to be the presidential candidates running for the election. And obviously the big question will be, who will the Republicans select? At the moment, Donald Trump still looks like he's the favorite, but obviously that comes with all the baggage and, chaos that preceded him. Now, it will be very interesting to see what happens in the US. We're coming to the sort of big holiday period, sort of Thanksgiving, and some of the big sales, etc. Just be interesting to see how the US consumer holds up, because presently still in reasonable shape, still got a pretty robust balance sheet, and it'll just be very interesting to see how much money is actually spent in the economy. What's quite interesting as well, even with all the talk about further rate hikes, that 10-year still hasn't broken above that sort of 4% level, currently trading around 388 and change. Now, what hasn't helped is that OPEC Plus has come out and sort of cut production slightly. That sort of irked the US and really provoked quite a strong condemnation from the Biden presidency. Now, obviously, while OPEC Plus is sort of trying to protect their sort of earnings and their sort of price, it's really not helping the global situation, because that's pushed oil back up around sort of $90 a barrel. Now in the UK, it's still pretty tough times for the new Prime Minister, Liz Truss. Certainly confidence in her government appears to be sort of waning almost daily now. The Bank of England have had to come in and intervene in the bond market again and sort of issue some pretty dire warnings about the financial stability of the UK financial system. And all this is despite Kwasi Kwarteng coming out and abolishing the cutting of the top tax rate. And certainly at the moment it looks like it's going to be a long cold winter for the UK and really some pretty dire times ahead. Now, for the EU zone, a little bit of positive news out there. The US has managed to broker a pretty historical agreement between Israel and Lebanon in terms of sort of boundaries and sovereignty and ownership of various sort of areas. And one of the sort of positives to come out of this is the gas fields in the Mediterranean. And that looks potentially as though it could be able to supply quite a bit more gas now to Europe, which would help obviously to alleviate some of the pressure coming on from the withdrawal from the Russian gas situation. Because certainly the EU gas supplies as well are still pretty full, apparently, in the sort of storage side. You know, they've done a pretty good job of sort of storing it up for winter. And hopefully, you know, if the winter isn't too severe, it looks like they should be okay. But obviously this Israeli-Lebanon deal will obviously help the situation as well. Because certainly the war in Ukraine has now taken a you know, sort of a major escalation. Putin, you know, really suffering from sort of every humiliation. Now, President Putin has turned to a new leader now for the Ukraine conflict, who is really you know, a sort of tyrant and really just shows no mercy. And on the back of the bombing of the bridge from Crimea into Russia, Russia has now launched several long-range missile attacks on civilian targets all over Ukraine. And again, it's, you know, it's really about President Putin trying to save face and show he is, you know, sort of strong and, you know, in the sort of face of aggression against Mother Russia. And at present, it's hard to see any sort of solution to this conflict. Although quite interesting, China has remained pretty much on the sidelines and, you know, very silent on it so far. Potentially they could have a bit of a major sort of role to play, but really need to come to the party and, you know, try and sort of help out the situation. Now in Australia, obviously after the back of a pretty reasonable sort of earnings season, and the fact that the Reserve Bank only increased interest rates by 0.25, it's just going to be interesting to see how that economy plays through, because certainly it's in pretty reasonable shape. There's still good demand out there for resources, minerals, etc. And you know, certainly with the increase in electric vehicles, some of the minerals and rare materials in Australia are pretty highly sought after. Now here in New Zealand, after the recent local elections, a pretty resounding sort of move away from the sort of left. You know, pretty sort of damaging for the government, who endorsed a couple of sort of high-profile candidates who were resoundingly beaten. Given the election is just over sort of 13 months away, the government's trying to put a spin on it and say, there's not really much correlation between local elections and a general election, but certainly the signs don't look good. And certainly as we start to head into the sort of summer months now, it's still pretty interesting that certainly the labour force in New Zealand is still struggling. Certainly hospitality is still crying out for staff, really across all levels. So despite the border being open now for quite a few months, they're still yet to see that influx of workers coming through. And also with the New Zealand dollar falling, potentially for overseas visitors, you should be getting a little bit cheaper to come here. But it's hard because if you haven't got the people to look after them on the hospitality side, in terms of sort of restaurants, cafes, etc., you're not going to see the tourists coming through. Because certainly the weaker New Zealand dollar is obviously helping exporters. Now, the housing market obviously continues to fall with those sort of rising interest rates, and most economists and analysts expect the Reserve Bank to increase interest rates one more time before year end, taking the OCR to 4%. But still some pretty reasonable dividend paying stocks out there, and income options are still quite available across the board. And if you're interested in discussing what's available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.